Hi friends, welcome to Adda 24/7. We are in the Sankalpa series for BFM. In this, we are covering various numericals, objective questions, case studies, okay, and theory questions as well. So follow this series completely. It is available in the playlist in the Officers Adda 24/7 YouTube channel. Subscribe to this channel. So let's move on immediately. Okay, today I'll be covering different yield curves, types of yield curves. Okay, and then the questions on that. Very important part from your exam perspective. Yield curve. There are four types of yield curves. Always remember. Yield curves. One is this normal yield curve. Normal. Normal means what? Let me explain you this. Suppose if you keep a FD. Let's think of FD only. FD. You keep a FD of 3 months. 3 months. Okay. And then I keep an FD. Let's say me. I keep an FD for let's say 8 years. Okay. 8 years. FD is what is maximum FD available up to 10 years, okay, in banking. So you keep the FD for 3 months and I keep the FD for 8 years. So if you are getting the FD rate of interest of let's say 3.5%, okay, you are getting an FD rate of 3.5%. What do you think I should get this rate of interest? Should it be more than 3.5? I'll write it more than 3.5 or equal to 3.5 or less than 3.5, less than 3.5. Okay, so what should I get? What do you think? More than, equal to, or less than? I'm keeping it for 8 years and here I'm keeping for 3, you are keeping for 3 months, so I'll be getting it for more than 3.5. Correct, I'll be getting more. Why? Because I'm keeping the money for the higher period, okay, larger period, right? So this depends on what? Keynes theory. Remember, Keynes theory is there. It says that the more you part with your money, the more are the returns expected. Now look at this curve. This is the maturity period and this is the yield. So this is 3 months over here and this is 10 years over here or 8 years over here. So that's why if you look at it, the rate of interest over here is higher. The rate of interest over here is lower. Now apply the same logic to bonds. Bonds with the lower maturity will have lower interest. Bonds with the higher maturity will have higher interest. This is a normal yield curve. Now this is possible when here we assume something. What do we assume? We assume that the country will grow upwards. Getting this point? If my country is growing upwards, only then this is possible. If my country is going into recession, then it will be exactly reverse. The FD rate, the bond rate for 3 months will be higher and bond rate for 10 years will be lower. This is known as inverted yield curve. Inverted yield curve is a sign of recession and normal yield curve is a sign of good growth. India is presently over here. Many of the Western countries, including USA and UK, they are in this phase right now. They are going towards this. Okay, they are artificially keeping the economy running over here, artificially right now. We won't go into those details because it's a huge topic. Remember, just if anybody wants to check, just check the yield curves for USA and UK in last year from June 22 to December 22, and then you'll understand everything. Right now they are in this phase, going in this phase, recession phase. That's why their yield curves are slightly inverted. They have kept it going right now. They have kept it around this flat or to the other extent to this upper level, but they can hardly sustain for some time. 1 year, 2 year, 3 year, that's it. Okay, now what is this flat yield curve? Flat yield curve means country is not growing at all, not going down, not going up. Flat. 3 months rate of interest will be same as that of the 10 years rate of interest. Humped yield curve. This is called as humped. Humped means what? There is a slight growth in the initial period, but later again recession. So this is known as transition. Okay, transition means what? It grows in the initial years and then it transits to the lower growth phase. So recession phase. Here it is recession, here it is growth. So these are the four yield curves. In exam, mostly they will be asking you 1, 2, 3. Because this is transition, recession. Generally, this recession is asked more. Because why? This is the only the typical one which is followed throughout the world. Okay. Now let's move on to the questions. When the upward sloping yield curve will appear, means when an upward sloping yield curve will appear, means upward means just now we saw this one. When will this appear? During the times of expansion, when recession occurs, during economic transition, when long-term interest rates are lower than the short-term interest rates. Long-term are lower than short-term. So when will this occur? In the comment section. I want it in the comment section. A, B, C or D. It is during the times of expansion. A. Okay. Now tell me in B, C and D. Okay, B, C and D. There are two options. Now look at this question. There are two options which are same. In B, C and D, there are two options which are same. Now, which are those options which are same? B is what? Recession occurs. B means recession. C means economic transition. So this will be what? Humped curve, camel humped, right? This is this camel humped curve. It will be like this. Okay, this just now we saw this. What is D? Long-term interest rates are lower than the short-term interest rates. Means what? See this. Long-term is lower, short-term is higher. So it will be like this. Now if this is like this, then what is recession? Recession is also the same. That's why B equals to D over here. Okay? It just I got it. The thought got into my mind. That's why I asked you. Okay? So upward sloping yield curve in the expansion, and recession means long-term interest rates are lower than the short-term interest rates. Everyone download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, tests. Whatever we require for clearing JIB and CIB, we get it over here. Okay. Define the flat yield curve. Flat means, just now we saw that short-term bond rates are equal to long-term interest rates. Okay, so basically short-term rates equal to long-term. I think that is the answer or no? Let's see. Short-term interest rates are greater than the long-term. Short-term greater than long-term. So can you plot these curves? Okay, let me plot these curves. See this. Short-term equals to long-term. So this is flat over here. B1. Let's plot this B. Okay. Short-term are greater than. So short-term greater, long-term lesser. So it will be like this. Recession. Long-term interest rates are greater than short-term interest rates. So this C will be long-term greater than short-term. So it will be like this. Normal. Small companies provide greater yields than large company stocks. This has no base at all. There is nothing called a small company providing higher yields or higher returns. What is the yield? Yield means asking rate. Asking. Always remember, demand, rate in demand is yield curve. So it's nothing like this. Okay. So the answer is A. Okay. How do you define economic transition? Transition means that camel humped curve. Okay. Transition in an economy from recession to expansion. Okay. Transition in the economy from expansion to recession. None of the above two answers are correct and both are correct. What is this? Recession to expansion. Here, A. Let's plot this curve of A. Recession to expansion. Recession means it will be first like this. Recession means inverted curve, right? To expansion. So it will be like this. So what is this? Again, it is a hump. Look at this. It is hump somewhere. Okay. So this is also true. From expansion to transition B1. Let's plot this B. So expansion to recession. So this is also true. So both are transition curves only. So both the answers are correct. Okay. Now how to join this Officers Adda 24/7 YouTube channel? Well, for joining this channel, scan the QR codes. This blue is for Telegram. Black is for your YouTube. Click on scan this. Okay. Then this one is for the Instagram. And how to join the Instagram, this YouTube using these codes. And there is a separate channel on WhatsApp. So you can join this WhatsApp channel also. Just type officers Adda 24/7 on WhatsApp. You'll get it. Okay. On WhatsApp channels now. There is a separate option of channels. Okay. A yield curve that shows down-sloped curve is what type of curve? Down-sloped. Now this is easy. Huh? Normal yield curve, flat yield curve, inverted. All yield curves show down-sloped curve. Is this all yield curves show down-sloped curve? What do you think? The answer is normal, flat, inverted, down slope, down. It will be inverted. Okay, inverted yield curve will show down sloped curve. A yield curve that shows upward direction and which long maturity bonds have higher yields is known as. So if any yield curve is showing upward direction and long-term bonds are having higher yield, just now we saw it, isn't it? What is the answer? A, B, C, or D? Type it in the comment section. Correct? Normal. Okay. Which of the following statements is false? A forward exchange rate is a good predictor of the future spot market. What is this? Forward exchange rate is a good predictor of the future spot market. Future. So forward rate is can predict the future spot exchange rate. Predict. Okay. A forward exchange rate and a future spot market may not be the same. So forward exchange rate and future spot market may not be the same. Okay. A forward exchange rate is an unbiased predictor of the future exchange rate. So forward exchange rate is an unbiased predictor of the future exchange rate. Okay. The spot exchange rate is a good predictor of the future exchange rate. The spot is a good predictor of the future. So we want what is false. What do you think is a false answer? Firstly, you should know what is true answer. Remember, nothing is over here in this question. It's just forward and future. Forward exchange rate is booked today for 2 months later. Okay. And future spot rate is the actual rate 2 months later. So that is basically the future spot rates. Here, just I'll explain you in simple terms. Today is what? Let's say any date. Okay. Let's consider 1st January. Okay. Jan 1, let's say. Today Jan 1. Okay. Now I book a rate today for dollar. And I book it for, let's say, March 1. I book the rate for March 1. Okay. So now understand what is forward exchange rate and what is future spot exchange. When I say forward exchange rate, I book this rate today for March. So this is known as forward because I have booked it today. Okay. Forward exchange. So this is forward exchange. Now what is future spot exchange? It means that actual rate on March, actual here, if I book this rate today for March, let's say at 80 rupees 75 paise. Okay, if I booked it at 80.75, but actually on this date, it goes to, let's say, 83 rupees. So this is known as my actual future spot exchange, and this rate which I book it today for the future is known as forward exchange. Now remaining things you can definitely get it. Okay. Future spot, same thing. Forward exchange, same thing. So which is the false one? Where is the answer? I didn't get the answer. Let's call this A, B, C, D. A, B, C and D. What is the answer? We want false answer. It is D. D is false answer. Spot cannot predict future. Only forward exchange rate can predict future. Okay. The objectives of central bank include. What is the central bank? Central bank means not Central Bank of India. It is RBI. We are having a separate bank called as CBI, Central Bank of India. Okay. So the objectives of RBI include to ensure country's balance of payments remains in equilibrium, to accumulate the country's foreign exchange reserves, to ensure the implementation of country's exchange rate policies, to control international trade. What should be the answer? RBI's main role is what? Ensure country's balance of payment is in equilibrium. Accumulate foreign exchange reserves. Accumulate means go on accumulating the dollars. to ensure implementation of country's exchange rate policy. Okay, implementation of country's exchange rate policy and to control international trade. See here, nobody can control international trade. That's out. Accumulate is out. Now the question is only between A and C. Ensure country's balance of payments is in equilibrium or ensure that implementation of country's exchange rate policy. See, this implementation depends on individual banks. Whatever policy is there, that is done by individual banks. Okay, that is not done by RBI. RBI gives the policies. So the answer is A. To ensure that country's balance of payment remains in equilibrium. Subscribe to Officers Adda 24/7 YouTube channel. Just now I told you how to subscribe to it. You can subscribe it on the YouTube also. You can scan the QR codes, okay, and do it. Because you will be getting various free YouTube series. All these. Right now you are watching the free YouTube series. You get it over here, okay. The exporter should necessarily submit the export documents to the bank within 15 days from the date of documents, 15 days from the date of shipment, 21 days from the date of documents, 21 days from the date of shipment. Now what is the answer? Let me see how many of you can answer this. Yeah. 15 days from the date of documents, 15 days from the date of shipment. Okay, from the date of, what do you mean by shipment date? Shipment. What is the shipment date? Shipment date means whenever you get that bill of lading, on that there is a stamp called as shipped on board. Shipped on board. On board. Okay. This shipped on board stamp, whenever, whatever date it has, that is known as the date of shipment. So this exporter has to submit the documents to the bank. It's not, actual word is not bank. It is called as AD, authorized dealer. Okay. So the exporter has to submit the documents to the AD within 21 days from the date of shipment. Remember, 21, and these days are calendar days. Remember, 21 calendar days. There are 2 days in banking. One is calendar, second is banking days. Banking, whenever banks are open. Okay. The multinational company encounters the following exposures to foreign risk. So any MNC will encounter which type of risk? Translation, economic, transaction, and all of the above. What is each risk? What is translation risk? Translation risk means what? Suppose if I am, let's say, SBI. Okay. Is SBI a multinational company? Type yes in the comment section. Is SBI a multinational company? It is fine, because multinational means which has the branches or offices in more than one country. So SBI has various branches in outside also. Okay. So let's say SBI is having a USA branch, and this USA branch is having some profit. Let's say $1 lakh. It has a profit. Okay. $1 lakh. Now this $1 lakh has to be brought to India, not physically. Whenever on 31st March, SBI has to report its balance sheet to RBI. So while reporting it, it will also report the balances or the profits of its subsidiaries which are in foreign. But those will be reported in rupees, because RBI follows rupee system. So this dollar will be converted to rupees notionally. That is known as translation exposure. Whenever I convert this notionally, whatever notional profit I have or loss I have is known as the translation exposure. Economic exposure means basically economics related to financial. Transaction exposure means related to transaction, settlement. Mainly this will be settlement exposure. Okay. So any MNC will see what type of exposures, all of these, isn't it? The role of hedging agent is, means what is hedging actually? What do you mean by hedging? Anyone? Type in the comment section, what is hedging? Hedging means, hedge. Buy in one market and sell in another. Suppose let's say there is a Reliance share, Reliance, okay, and in NSE, let's say it's running at 2,500, and in BSE, it is running at 2,503. Now this change happens only for 3 to 4 seconds. 4 seconds only, not more than that. So within these 4 seconds, the whole game is played. So I'll buy 1 lakh shares over here and sell 1 lakh shares over here. Sell. Here I buy. What does this mean? I'll do it in 4 seconds. Buy here, sell here. So I earned 3 lakhs over here in 4 seconds. But what is the risk? If I delay in this, I'm gone, because this will automatically catch up with each other. So what is the role of hedging? Forget this agent. What is the role of hedging? Assist the firm in determining which foreign exchange transactions should be hedged. So here, depends on which currency or which commodity you are hedging. There should be enough liquidity in that. Liquidity. If there is no liquidity, then there is no logic of hedging. Hedging is always done in liquid stocks, liquid commodities. So which is to be hedged? So that should be decided. That should be supported by the team. Whichever agent's team is there, it should support that. A. Assist the firm in determining the types of currencies or interest rate swaps. So how should I hedge it? Here, what is to be hedged? First question is what? What is to be hedged? And second is how. So any hedging agent's job is answering these two questions, what and how. Okay. So answer is what? Over here. Answer is C, both A and B, isn't it? One for your homework. When the economy is moving up or down in a period of transition, what type of yield curve you will find? Economy is moving up or down in the period of transition. Remember, we are talking of transition. Then which type of curve you will see? Normal, flat, inverted, or humped? Answer it in the comment section and tomorrow we'll see it. Okay. Chalo, before going, let me show you. See here, join the batches immediately. Sankalpa batch. Okay. How to join this? Let me show you. Let's go to Adda 24/7. I will always suggest you to go through the app. Remember, in the app you are getting 1% extra because you are having the coin systems. So join these batches immediately. How to join this? Let me show you. See this. Now you go to Adda 24/7. In the app, you'll be getting, again I'm telling you, 1% extra using the coin system. So join through the app, download the app and join through it. Go to JIB and CAIIB. Click on CAIIB November. Done. See the Sankalpa batch. Click on this Sankalpa batch. See, the fees is 77% off is going on. So 77% off, then online live classes, test books, test series, ebooks. Click on these ebooks. You'll see subject-wise ebooks. Click on this subject. You'll see chapter-wise ebooks. In such details you have, up to the chapter level you are having. Okay. Similarly, test series. Look at this test series. All these test series are subject-wise. Click on this subject. You'll get chapter-wise again. Okay. So that's why, very important. Join this test series, ebooks. Everything is available in this Sankalpa batch itself. Join it immediately. And huge discounts are available. Plus, I'll tell you, you can join the Mahapack as well. In the Mahapack, you are getting multiple batches. Plus, not only multiple batches. Plus, you are getting, see the JIB, CAIIB Mahapack. Click on CAIIB Mahapack. Right now, double validity is going on. So, you are getting the off as well as you are getting the double validity. Double validity is there for 6 months and 12 months package. So, how to how to join this? Click on buy now. Apply the code. Okay. Apply *77. See the *77. Apply this code. 77% off you are getting. Plus you are getting double validity. Again you are getting everything. Recorded sessions, ebooks, tests, everything over here. So that's why I would suggest join this batch immediately, Sankalpa batch or the Mahapack immediately. Okay. Because exams are near. Okay. I'll be back tomorrow with another series at the same time. So till then keep studying and do join the batches. Bye.